to, you know, and this, reminiscing. I actually was searching. I think somebody told me Pink Floyd's gonna go on concert. I went, what?
Ashley.
Yay. How we doing?
Good. Are you ready?
I'm ready to rock.
Are we ready? You know, sometimes I would like to leave the song for the entire podcast.
That would be cool, wouldn't it? Like in the background?
Yeah, like in the background.
Well, why not? Leave it on. I don't mind. I love it. I just actually heard, I was just checking it out, that there's no secret that I am just madly in love with Pink Floyd, the greatest band ever to walk the earth. They're doing a 2025-2026 concert.
Really? Is it?
Wow. I don't know if it's fake news yet. I'm trying to confirm it, but announcement out of UK. Let me see if I can read it more. Okay. So this was out of the UK though in February.
Mm-hmm.
And Pink Floyd announces 2025-2026 surprise global tour and exciting new album release. So I haven't got any confirmation yet. This is, we'll see. I'm checking every day. Checking every day, twice a day, because I want tickets. So I have to also figure out if they're coming to Vancouver. Because if they're not coming to Vancouver, I'm going where they are. So we'll see. Yeah. All right. So, what are we doing here?
What are we doing? You want to check the three new pillars updated?
Yeah, let's talk about. Welcome everybody. If you're here, if you're live, if you're not, if you've seen the recording, welcome to a podcast, The Trader's Journey, where we explore all market situations, what's going on, and basically talk about the journey. And we can put our three pillars up there, if Isaac can put that up. This is The Trader's Journey, three pillars that we use to, maybe you can turn down the music just a little bit, Isaac, if you wouldn't mind. As much as I love them, but I'm starting to kind of just do the old. Oh, you got rid of it?
This is the minimum. The minimum.
Oh,
this is the minimum.
Little,
yeah.
Oh, that's a shame. That's a little. But I start listening to it, and I start singing along, and
Maybe you have your headphones with a lot of volume, because it's very low on my side.
Let's see if I can.
Oh, I know. It's the streaming. Because I'm sharing the screen. So right click on my stream and just turn down the volume.
There you go.
Yeah.
Awesome. That's good. Yeah.
All right.
Makes a lot of difference. Thank you.
Yeah.
All right. Where was I? Okay. Trader's Journey. Here's our 3 pillars that we use to navigate this journey, because it is a journey, it is a process. And we look at macroeconomics. Let me explain macroeconomics for those who don't understand, right? The macroeconomics is on the larger scale. What are the drivers that are driving the economy? What are, the financial situation? Right now, we're very aware of what those drivers are, right? So in the last few years, it's been inflation, right? So inflationary concerns have been the macro driver of the market. So the fundamental data, we look at central banks, the monetary policy, interest rates, unemployment, GDP, gross domestic product. What makes up the gross domestic product? Well, all sources of data, employment, unemployment, everything that goes on decides the gross domestic product of the country. So we've gone over that in previous podcasts, different GDPs from different countries and their debt ratio. We've talked about that a few times. So the other, I lost the, thank you. So now the technicals, understanding the charts. Now look, you a lot of traders will leap to the charts right away. And I understand why, because I was there too when I first started. And, I think, Isaac can attest to this. It's more like, this is where we believe the money is made. Would I be right in saying that statement, Isaac?
Yeah, I guess.
When you first started, you went right to the charts, did you not?
Yes, it's fun.
Right.
It's fun and It looks nice.
Yeah, and it's kind of where you believe this is where I'm going to make my money, because when everything goes right and you've entered in it, that's where the money is made, right? Yeah. So naturally you're going to go there. But would you say, based on, the last 6 months, 8 months, year or whatever, would you recommend that people just jump to the charts, or would you sort of say there's a little bit more to it and maybe they need to look at certain other things to help them understand what the charts are saying? Does that make sense?
Yeah, that makes sense.
Yeah. So this is where we have to have a mind shift of what we need to do, because, everybody can trade if they want to, right? It's not you that's the problem. It's how you're being taught and how you're being guided. And mindset is a very big thing. If you look into the 3rd pillar, which I believe is the most important pillar, but if we put this at number 1, no one will pay any attention, because you don't want to know about this. But I'm telling you, having the right mindset of understanding, prepare the right way and plan the right way. Well, let me ask Isaac, what do you think of pillar 3, Isaac?
Yeah, that probably is more like secondary. Sometimes I don't think people pay much attention to it. I still don't follow the rules strictly like I should, but I know it makes a difference, of course, of how you prepare.
That's a mindset thing, right? That's a mindset scenario, is that you're not following the rules. because you're more, have that thing of, well, I want to win. I believe this is happening, and rather than seeing what you're seeing and no, I'm sure this is going to happen. I'm sure this is going to. This is the big thing with Isaac and I throughout this time period, is that he would come to me and he'd say, yeah, look at this, but I'm pretty sure this is going to happen. I said, yeah, you may be right, but right now it's going down.
Oh, you know what? I saw a quote. I don't know. I can't remember who said it, but said like, everyone has the brain to trade or to be an investor, but not everyone has the stomach.
Oh, that's a great one. Oh, I like that one. You should write that one down. We need to put that in our community when we get our community going. I love that one. That's really good, because that's true. Because the biggest challenge is managing risk, right? Can you manage the risk? Do you have the ability to do it? Because everybody's stomach of what they can take is different.
Yep.
Mine's different to yours. Yours is different to mine, right? And it's like, what can you deal with? And we know that this current environment is going to change. We don't know how long it's going to go on for, but this is not going to be forever. Right,
No.
we know that. History has told us that. The last time the S&P had dropped this much, right? The last time equities has been kind of sinking and having this situation was in 2020, COVID, and 2008, and the market survived that. This is a little different because I do believe this is humanly created, but that's just me, right? We have a lot of what can I say? Well, COVID was a situation, right? COVID was something that happened to the global world, right?
Yeah, the trigger.
Yeah. The 2008 housing crisis was an economic situation that happened. But whoever the idiots were that said, yeah, let's give mortgages to people that don't make enough money or don't have jobs, well, that was mental. But that's beside the point. But, maybe it's not as simple as that. But the thing is that, yeah, it was crazy. One of my favorite movies to watch is The Big Short. And I would recommend to everybody that's into trading to watch The Big Short. And it's a little Hollywoody, but it gives you a sense of how the financial market kind of works, and how freaking crazy it is, and basically how shitty the bankers are and how they go about their business. But they're just doing their job. They're just what they're there for. So the trader, I believe that if you do the right preparation, that means find out what's going on. What are the central banks doing? Just kind of keep abreast of that. Make sure there's certain data coming out. So, like, I give you an example. So, if we know right now that tariffs are the key driver, because if you look at this week, prior to the week, the market was dropping like crazy, right?
Yeah.
It was just literally like tanking. And then all of a sudden we get the market spiking up absolutely crazily, and a whole bunch of people made a shitload of money. And it's like, well, why did that happen? It happened for one reason, because Trump turned around and took away the reciprocal tariffs that he was planning to do, and a 90-day pause. And it's like there's a brief euphoria, and the biggest gain that it's ever had, and whatever. But is that the true direction? Well, we don't know.
We don't know.
We don't know, right? So it to me, when you have the market reacts to a situation that is controlled by an administration or one person, we got a problem. We have a big problem, in my opinion, right? And we need to kind of settle down. Am I trading? Yes, I made some trades. In actual fact, I'm going to go over a gold trade because I was it. Did we do it live last week when I talked about gold, or was that just me and you? And I said because I was selling, and I said, yeah, as long as I'm under this level, I'm selling. But if it goes,
I think
oh, it's
last week you showed the chart, but you were waiting for the levels, like the levels didn't hit
right.
your levels. So, but then on the days after, you told me finally I waited and finally did what it.
Yeah. So, but I was selling at that time. Excuse me. I was selling at that time, and I did okay. I closed out okay because I started to see that it was going up towards that level, and I didn't want it. I didn't want to be there because and it broke above it, and then I bought.
Yeah.
I'm buying man. I bought good, and I'm not in it anymore. We'll go over the charts in a second, but this is kind of my point where I'm getting to the third pillar, where it says preparation and planning, right? When you prepare the right way, and you guys will know I talk about levels, and when we first were talking throughout, just so everybody knows, Isaac and I work in the same company, and we would always talk during the day about stuff. And he's new. I've been doing this for a while. I don't trade stocks and equities. I just trade currencies and gold, sometimes oil. So we would have conversations. This is how this was born. This is how this came about. We decided to have those conversations live
Yeah.
and on YouTube. And we're both excited for it, right? Because we want to help. We want people to get better. And it helps him get better, So where was I going now? I think I got off what I was talking about now. Shit. This is what happens when you get my age.
You mentioned the third pillar, and you were also mentioning the levels. The
Right.
gold levels.
So I use levels. You will always hear me talk about levels here, levels there, levels there. And I think now I've really helped Isaac because he would have basic support levels, right? And he started to understand those levels in his asset. So what does that mean? Remember, he trades different assets to what I do. However, I think I've proved by looking at Meta as a perfect one, Nvidia, right, and then the S&P, of drawing those levels and explaining my theory that it works. It works on any asset, right? So the big one for me is the 50% retracement of a candle, the close and open, and then we have some Fibonacci stuff and all that, and trend lines and stuff like that. So that's you prepare by marking those levels. You prepare by understanding what the macroeconomics is going on and what the fundamental triggers could be during the week to move the market in the asset in the direction you want it to move. Does that make sense? Right? Okay. So once you've done that, you make a plan. So okay, my plan is like Isaac said, you were waiting for this to happen, and I waited. And we can call it price action, call it whatever you want, right? It's mainly levels. So it did this, and then I have a plan of once it does that. So once it hits a level, breaks a level, closes above a level, now I'm looking to enter. And I have a plan on how I do the entry, right? And then once that's executed, we're in the trade and away we go. So when you get all this going on, right, when you put these rules into place and you put these formulas and these things in there, your trading will get better. And you will be going into the week with confidence. I also have what I call controlled risk. Everyone talks about, I'm going to do 1% of total on a trade. I'm only going to do 2% of this. I do 3 to 5% across the board of whatever my account is. What does that mean? So what that means is I'm planning. When I do my week, I may have 3 or 4 possible trades. And what I'm doing is, what position sizes am I going to do? So I look at my account and I take 3%, 5%, whatever the decision is. It's my decision. Doesn't matter, right? I prefer 3. So you take 3% of your total account. You say, okay, that's all I'm risking for the week. That's it. And then you break that up to the trades you possibly have. And if you've prepared correctly and you've got 5 possible trades, maybe only 2 or 3 may be ready to execute in your plan, right? So that means, well, if you have a total of $1,000 to risk, you can divide that up however you see fit. You say, well, my plan on this is not really working out. It's not going in the right direction. Great British USD is a perfect example. I'm looking to sell it. And you'll probably say, what on earth are you looking to sell it? Doesn't matter, right? But right now, it's going up like crazy. And the trade's still sitting there waiting. But at this point, I'm saying, yeah, I think I'm wrong on this one. I think I'm going to wait for a pullback and then see what happens to that pullback. And more than likely, I'm going to close out my pending sell and then change my position. Make sense, right?
Yep.
So but my plan was this, and I planned it, and everything together with controlled risk. That means you only lose a certain percentage of your account. You're not chasing the market. I'm telling you guys, you do all this stuff, you're kind of chilling. You're chilling. You don't even have to be at the beach, but you're chilling. Listen to Pink Floyd. So that's what we do. So we here discuss the journey through those 3 pillars or principles, whatever you want to call them. And we have fun doing it. So that's basically it. So let's talk about, we've got to talk about Trumponomics, right?
Trumponomics.
Trump's at it again, right? So what's the feeling? Market manipulation? Did he do it on purpose? Insider trading? What do you think?
Yeah, everyone says that. Yeah, why not? Yeah. I mean, it happens. It happens not only with Trump, with the Congress, right? So, yeah, I guess why not?
Yeah. But this is the president of the United States. But we talked about this about 2 months ago, right? A while ago.
Yeah,
right? We were talking, saying, "Hey, he's doing it on purpose, and we got to get a big spike." And again, didn't think it would happen so quickly, right? We expected it to, happen at some point, and we weren't really surprised, were we? I wasn't.
I also remember he said for an interview, or he mentioned that he wasn't even looking at the stock market. Like, he was just letting everything happen and didn't pay attention to the stock market.
I guarantee you that he is looking at the stock market and he's a liar. I say that live because that's not true, right? He is a businessman. First and foremost, he's a businessman. Everything he's doing is about economics, right? It's about the economic health of America. And you're telling me this is what gets him into trouble with people. This is what gets him into trouble. Like, it's not about the tariffs. It's not about, they just don't trust the guy. You can't believe what comes out of his mouth. It's like, it's fucking chaos. It's like, oh my God, what's he saying? So to turn around and say, I don't look at, really? You have advisors in the White House. You don't think they're going to, hey, President Trump, markets went down again today. S&P dropped this much. The whole thing he's talking about is the economy. Yeah. The whole thing he's been talking about is making America great again. The whole thing he's been talking about is to put the tariffs on because it'll make the economy better. You're telling me he's not looking at the stock market? No, you're not telling me. He's telling me he's not. Bullshit with a big capital BULLSHIT. I don't believe him because if he's not, then he's dumber than I thought he was. Sorry, doesn't make sense. Does it make sense that he doesn't look at the stock market?
I don't know. I think probably during that time he wasn't, but It's hard to believe that he's not paying attention to it.
That's my point. That's kind of my point. You said it in a very nice way. I said it in a, my typical bombastic way. so I think, you look at confidence is way down, right? You
Yeah.
got the VIX went up like crazy, came back down again, but it's still there. You got the university. Well, let me show you guys. Let me show you. Let's go to the calendar. Oh, hold on. I'm going to go back and I'm going to share my screen.
Good.
I remembered this time. This is something I usually forget all the time, but not this time. I'm on top of it. All right. So tell me when you see the calendar.
Yeah.
Okay. So we go from the bottom. I mean, like consumer sentiment.
Can we
right?
do something? Sorry. Can you press Control on your keyboard and hold Control and then scroll up? Oh yeah.
Wow. Another thing you taught me. Wow, Jesus.
Can
you never get go ahead.
And can you scroll down just one time? So it's too much for the format of the stream. Doesn't fit.
How's that?
Yeah. Yeah. That. No, one more.
Good?
Yeah. No. One. Yeah. Perfect. This is perfect.
We don't really need this. Can make it bigger if you want. Anyway, that's okay. All right. Let's go from the bottom here. So, University of what is that? Michigan, I think it is. Yeah. So the University of Michigan is a level of composite level of composite index based on surveyed consumers.
How many? 420 consumers.
Yeah, 420. Right. It basically asks respondents to rate the relative level of current and future economic conditions. Right. But I want to see, look what it was before. It was 57.
Mm-hmm.
But I want to see. It doesn't matter what I believe about surveys. It's beside the point. Right? People look at these numbers, so I have to too. So, and I like this. I like the University of Michigan sometimes has good things. Anyway, look at these numbers. November, 73, 74, 73, 67, 57.
Oh, yeah.
Right? Now 50. This is telling the alarm bells are going off. Right? Alarm bells are going off. Look at this. PPI, month to month. What is PPI, month to month? Right? This is change of finished goods and services sold by producers.
Yep.
Right? Actual forecast, blah, 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 finished goods, blah, blah, blah. It's a leading indicator of consumer inflation. When producers charge more for goods and services, the higher costs are usually passed on to the consumer. Right? But look, we're getting a negative here, right? So what is this telling us? We're telling us they're not selling as much. Maybe they're not producing, right? So that's an alarm bell, is it not?
Then the negative means they're decreasing the prices?
No, for me, okay, so, right. So, where is it?
Actual greater.
The change in price of finished goods and services sold by producers, right? So they said here is 0.1, and then this is 0.2, right? It's supposed to be 0.2, right? Yeah. And now this is a minus. So what does that mean? It means they're not moving the prices up, right? They're moving that they haven't increased the prices of the finished goods, right? So why is that important? Why? Well, we know we have inflationary concerns, right? So now inflationary concerns start with increasing of prices, yes or no?
Yes.
The increasing of prices start where? They start with
the producers.
Right, thank you, right. And we're seeing a negative here. Make sense? Right.
Yes.
All right, so now match this with this one here, right? This is a core PPI, right? Core PPI, change in the price of finished goods and services sold by producers excluding food and energy, right? So excluding the nasty ones, right? Look at this one, 0.3, and it was a negative 0.1. So we got two of these main sort of sources. You got core PPI without the energy and food, and you got the one with. Look at the difference. Look at it. But look at what they were saying it was going to be, and I always look at previous.
Yeah.
Right. 3303. Boom. Woo. Now what caused this? Trump again? It's a big difference. Now I like the bottom one. The bottom one to me, right, is a big one. Right? Again, University of Michigan survey of 420 consumers, what they expect prices to be 12 months in the future. Right? 12 months in the future, right? Look at all these, look at the previous November, from November, 2.6, 2.9, 3.3, 4.3, 4.9. Now, we know this has been happening, and this is one of the things where I keep saying, hey, inflationary is there. Look at this, 6.7.
That looks bad.
Right?
Yeah.
So now, they say, well, this is good. Is it? Is this just not a reaction to the tariff? Like, what is this? This is month to month. We don't know. Right? We don't know. But the administration jump on this stuff. They go, oh, we got good numbers. It's coming down. Everything's coming down. I mean, look at the CPI here.
Yeah, what's
CPI
CPI?
core, right? Look at it. 0.1, right? You know what CPI is? Changing the price of goods purchased by consumers. That's you and me, right? But in America, right? And count for a majority of overall inflation, right? So we had inflationary concerns. So if this is high, it's not good. But look, 0.1, right? So, it's coming down, right? CPI month to month, minus 0.1. CPI year to year, 2.4 from 2.5, right?
Yeah.
So, but before you get excited, look at the numbers beforehand, right? 2.6, 2.7, 2.9, 3, and then 2.8, and now we have a 2.4. What caused the 2.4 differential? Trump again? Because they were saying it was 2.5. So they were forecasting 2.9 all the way. But there is an interesting statistic that I like to go to the federal banks, and I like the Cleveland Central Bank, and they have an indicator that indicates what do economists think of the inflation rate will be in 10 years. And it was 2.93. So that means, remember, the target is 2%. That means for the next 10 years, these top economists believe that the inflation rate will be above what it's supposed to be. So that's kind of interesting, in my opinion. And does this not go against all thought of like, well, the tariffs are supposed to, it's going to end up costing us more.
Yeah.
Right?
Yeah.
But they're using this as a barrier, saying, oh, no, look, everything's coming down.
So you think this is another manipulation?
I'm not going to say that. It might be happening. It might be true.
Yeah.
But there again, we've got to look at the environment. So last month was a jump, right? Right. You look at this one here. This was March 13th. Oh no, March 13th was 5. This was 1. So look at this. So the actual for March, they said minus 0.1. But look, it got revised. This is a revision again, right? This is a revision, right? Revised from minus 0.1 to 1. So is this true? We don't know. Because look at all the revisions. Revision. Right? You understand what I'm saying, right? This was revised from 4.9. This was 5%, but revised, 58. Right? So for me, I look at this. Look at this. Look at this. Minus 0.4 revised to 1, but it says 0 there. That's the month before. Sorry. So the month before was 0, then it got revised to 0.1.
Mm-hmm.
So if we carry on this trend, this could be revised. We don't know, right? But what I'm sort of looking at saying, okay, this is the first signs, but it's only the first one. Everything else has been on the high side, right? And we talked about possibly could be happening as prices could start increasing because companies are going to increase them because they're scared of the tariffs. But then we had a lot of purchases going on, maybe for companies to hoard stuff, right? Say, well, I'm going to double my order, and because we have to think logically. What would you do as a business owner?
Yeah,
What
companies are doing that. Yeah.
Yeah. You're threatened with, I mean, you can't do that with avocados, you can't do that with tomatoes, I get it, but anyway, that's all changed now from that point of view. But if you're in stainless steel, you go, shit, I'm going to double my order, right? So you kind of like look at that scenario, and maybe that affected a lot of stuff like that. We go to CPI here, maybe this 0.5% was affected by that. This, 0.2 reduced down a little bit because this was already, we don't know. But I want to see more of this low numbers before I get excited to say, things are changing,
down, yeah.
coming down. So we'll see. So what are we looking at next week? Well, let's have a look. What we have next week. And, I only do the red, guys. I mean, if you want to look at everything, you press this stuff, but I don't bother with this. Sometimes I do this, and apply this. It's okay. You can do it if you want, but I don't for anything. New loans makes any difference to anything, but what do I know? But if you want to look for, speeches and monetary policy meetings for Australia, sure, go ahead. But in my experience, in my journey, I learned, I don't care about this. I only care about what can move the market, because these market movers are very temporary, in my opinion. So I just look at this. So what do we look at? Well, Monday we got the, claim and count change from unemployment from the UK, right? And we'll see what they come up with. March was pretty. Look at this. I mean, the forecast was 7.9 and the actual was 44.2K. I mean, really? I mean, that much difference? I mean, somebody should be fired here, shouldn't they? You forecasted this, but this came out as this? I don't know. Terrible. But their forecast is 30.3. We'll see what they come out at. I mean, we'll see. CAD, CPI monthly, that's all coming out. I mean, I would watch Canada. I think Canada's, although GM just closed a plant in Ontario making, what do they call them? EVs, or, the electric cars. GM just closed a plant because they're not selling them. So I don't know what that's about. I haven't really read about it, but I did see the news announcement. So we got Bank of Canada monetary policy report. So US, we have core retail sales. This will be an interesting speech.
Yeah.
We'd like to see that one. So we have unemployment. So not much really from the US, right? Now I want to go to this next part, news, right? And, while this is good to read and have a read and understand what's going on, I mean, look at this, Federal Reserve, right? So, yeah, but look, see, it's yellow. Doesn't move the market much. Look at this here, BlackRock. Now, BlackRock? Do you know who BlackRock is? Do you know that company?
I know it's a big company. I don't know what's about. What is it? I think we're close.
Largest mutual fund in the world.
Oh,
Big company. just investment company. Well, anyway, he's saying you're very close to a recession. So do we believe someone like him? Well, I don't know.
Yeah, I would.
You know, would you?
Yeah,
Well,
I think
I think we have
who
to be
else?
careful.
Who else said it? Another banker, JP Morgan. Like they said 60%
Yeah, now they
probability.
changed that.
Oh
They
yeah.
actually changed it now. They changed it. They still think we're in a recession, but they dropped it to 40%.
Oh okay.
This is what's happening in the environment right now. Something happens, the next day things change. So this is where we have to be careful, right? So would I listen to BlackRock CEO Larry Fink? No.
No.
Do you know why I want to listen to him? Because he is in charge of the largest private investment
Rich people.
firm in the world. Like it's worth trillions. I don't know what it exactly is, but it's worth a lot of money. So, like, if he has an opportunity to influence decisions, don't you think that you know kind of makes his job like
So you
I can
think
influence it.
he's helping creating fear?
Yeah, why not? Push the market lower. Why? So they can buy it
Make
lower,
more gains.
right?
Yeah.
I mean, okay, it's a cynical comment from me. I get it. Very cynical. But it's very like I don't have anything to gain by my comments. Not that I have a large enough word that people are going to listen to me, right? He does. He does. People will listen. Oh my God, Larry Fink said this on CNBC. Oh my God, right?
Mm-hmm.
So we don't know if he has investments on the opposite side. We don't know. And people start pulling and he
Mm-hmm.
starts gaining. We don't know.
Later on.
I know, cynical, I guess, but I don't. To me, this is noise. This is just a guy's opinion. I just give my opinion. Don't trade on my opinions, guys. Figure it out. You find out yourself, right? I'm just talking to you about what I understand through my journey,
Mm-hmm.
right? And I have insights. I have opinions. We discuss them very openly. I'm not saying trade on my opinions. I'm saying here's an opinion. You go figure it out yourself. You go check it out. You go look. If you want to know where to look, send me an email. I'll show you. I'll show you places you should go to. I'll show you people who you should listen to who don't have a hidden agenda, right? Because my information is researched. I find things out. Most of the time, I go to the federal bank sites to find out what they're doing, what's going on, listen to their reports, right, and all this kind of stuff. The one thing we know when we hear from Powell, right, he says the economy is ticking along, and he's right. The economy is ticking along, which goes against all of what we're seeing.
Mm-hmm.
This is why we need to be very careful. This is why we don't need to panic, right? So this is what we look at for next week. And yeah, be careful what you listen to. And when I say be careful what you listen to, maybe I should reword that. Be careful how you react to what you listen to is probably the better word, right? That's probably the better way to explain it, right? So any questions on that, Isaac?
No, not on that. I have a question I wanted to ask you about volatility, the VIX.
Yeah.
How can we use the VIX to help us? I mean, I
Well,
understand the VIX increases means a lot of volatility, means more fear. But let's say the VIX now comes down to the normal levels. That means the market is like more chill, setting down, or what?
yeah, so there's more positiveness. Outlook is good.
Mm-hmm.
So let's talk about risk on and risk off. Do you understand that terminology, risk on, risk off?
Not really.
Okay, so very quickly, not too detailed because there's a little bit more to it. Risk on is where the risk appetite is acceptable. So that means more money goes into risk assets like Australian dollar, CAD, right? Those kind of stuff, right? Because they're buying metals, they're buying like materials to build, all that kind of stuff, right? So that's a risk on scenario. Risk off is safe havens, putting your money in a safe haven because you're not really sure what's going on. So safe haven, commonly Swiss,
Bonds.
yen, right? And the US dollar, and you said it too, bonds, right? So risk on, everyone's going into the stock market, right? Risk off, everyone's going into bonds, right? However, what's happening right now? Money is not going into bonds. Money is coming out of bonds, which is a holy shit scenario. Because if the stocks are selling off, right, which they are, right, money should be going into bonds. So why is money coming out of bonds?
Why?
No confidence. No confidence. If it's me, if I'm the one making the decisions based on what I know, based on my experience, right, I'm saying, holy shit, I don't have any confidence in this administration. I don't have any confidence in what's going on. So I'm just pulling the shit out. And I'm going somewhere that's a little safer. So my risk is going to be less. So I'm going into small cap stocks, right? I'm going into gold. I'm going into silver, copper. I'm going into those assets that, it's a little less risk for me. I'm going to go watch the yen get strong, right? Stuff like this. So, steady. Swiss franc. It doesn't move that much. Steady. The U.S. dollar is a risk on, a risk off scenario. It's a safe haven, typically. But the U.S. dollar is not like now. Everyone's not. They don't trust it, right? They're like, we're a little nervous. So it becomes like a very uncertain scenario, right? Makes sense, right? So the VIX is what's informing everybody. Oh my God, what is everybody thinking out there? Everybody's fearful. Everybody's worried about their 401k, right? I talk mostly about U.S., right? Because the U.S. is the leader, right? And this is affecting whatever happens to the U.S. affects the rest of the world. But there's a shift going on. There's a humongous, in my mind, a shift going on. And here's the crazy part. Let's go back to the tariffs again, right? Donald Trump pulled everything, said, I'm not going to do reciprocal tariffs. We're going to go 10%. We're going to pause for 90 days, except China. And 105%. They come back with that 125%, or actually 104%, 125%, right? They came out 140%. Like, he's just giving it to them. Who is the number one trading partner, right? Who sends more product to the U.S. than anybody else? Well, who are the top three?
I don't know. I would say China, Vietnam, and I don't know.
Vietnam. Where'd you get that one from?
Everything's from Vietnam?
No, come on. Like, you should know this. You
Okay.
do know it. When I tell you, you're going to go, oh, shit, yeah, of course. Like Canada and Mexico
Yeah.
and China are the top three.
Okay.
However, do you know where they are, 1, 2, and 3?
What do you mean where they are?
Well, who's the top importer to the U.S. out of those three? Who's the top?
I would say China.
Nope, Mexico.
Is it Mexico? Wow.
Yeah, surprising, right?
Yeah.
And then it's China, and then it's Canada. However, that's not the key. The key is what is it do they export to the U.S.? That's the important part. So I have something for you guys to look at here. Right? I find this is what I don't understand. What the hell this guy is doing? And so let's see here. I'll show you this first. Oh, hold on. Yeah. Can you see it? Yeah. Okay. Good. You can see it, right? Okay. Is it big enough?
Yeah.
Right. Look at that. 500. This is 2024, by the way. 500, close to $510 billion from Mexico. China is 462. Canada 400. It's pretty big numbers. Look at Germany. Look how it drops off from these top three. 500, 400, 400, and then 163, 150. These three are the top major, right? And he's happy with Mexico, kind of happy with Canada, pissed off at China, right? And it's like, are you kidding me? But that's not the most important thing. Watch the next one. Look at this. The top 50 products imported from China to US. Now, I want you to understand, I want you to see if you can figure out why this is such a big deal.
Well, it's going to cause inflation for all these products.
Wow. Look, electronics and technology is 160 billion, which is 30% of the total imports. Machinery and equipment, 250 billion. That's nearly 50%. Why is this such a big deal? Well, let's go down and let's look at machinery. Industrial machinery, solar panels, batteries, small home appliances, air purifiers, vacuums, agriculture machinery. Think about this, guys. What did he say? We want to manufacture. We want to produce. To do this, you need machinery and equipment. 50% of the products that are imported to the US from China is machinery and equipment. And then you go to home and furniture, 30 billion. And toys, 23 billion. We know when we want something, we want to give a little cheap gift or we want to buy some cheap decorative stuff. Where do we go? We go to the dollar store. And what products are purchased at the dollar store, right? Where do they get them from? China. Those prices is not, well, we don't have a dollar store anymore. I always say that. That's no longer a dollar store. It's a $10 store. Now it's going to be a $15 store, right? All these little stuff, beauty and personal care, 7 billion is going to increase. Yeah, it's only 1.3%. But I'm talking from the regular people. Fashion and textiles, home and furniture, 30 billion. Not the, look, but the big one to me is this one here, 160 billion. Yeah. This is,
iPhones.
Let's look. Smartphones, laptops, exercise smartwatches, headphones, earbuds, televisions, computer components, video games, household, everything that everybody loves.
Yeah.
Why is he fucking with China? I don't get it. So interesting. So I thought you guys would like that. I find it interesting. So what is the underlying thing he's trying to do here? What is it? Because China sends cheap products. You get right from here, as you can see, right? And for me, it's like, okay, I can do, you know what I mean, I can do without a computer or a smartphone or whatever. Not so much a computer. It doesn't have to be brand new to me. But for me, more importantly is number two, this one here. Machinery and equipment, 250 billion. Where are you going to get this machinery and equipment for a cheaper price around the world? Where? You're getting it from China because it's cheap.
Yeah.
You're getting it from China because, so you're going to go to Europe? You're going to go to Germany? You're going to go somewhere else? I don't know. It's going to be interesting. So something to think about, right? So anyway, it's an interesting scenario. The thing is this. It's interesting, right? We are in interesting times, right? It's fun, right? It's fun and stuff like that. But it's only fun if you're not losing money. If you're losing money, it's not fun. So how do we do that? Well, if we remember on the 3 pillars, you know, we said preparation and plan. Preparation is finding out about all this shit and understanding where everything is. You look at what Trump is doing and what the central banks are saying. Are they aligned? Yes or no?
I don't. Well, the central banks, they're not doing anything.
Are they aligned? In your mind,
I guess if
are they? You think the central bank is aligned with his policies and with everything?
well, the Fed's just waiting to see what happens to do anything. They're not doing anything yet, so I would say,
Okay, so
yeah. So far, yes.
you think they're aligned?
Yeah, with the tariffs and everything.
Yeah, that's your first thought.
Yeah, they're aligned.
Automatically, your first thought is they're aligned.
Yeah.
No, you're on drugs, man. They're not aligned.
Why not?
Jerome Powell. Well, okay. So what did Trump say right from the beginning? Lower the interest rates.
I mean,
lower the interest rates. We got to do this. We got to do this.
Yeah.
Powell wouldn't do that, right? They're coming in and they don't understand. They openly said, he said, we don't understand his agenda here. We don't understand the policies. We don't understand what they're trying to do. That's not their job. Their job is to protect the financial flow of money. And that's what they're doing.
Yes.
So they're not aligned because they don't understand. He said it. He said, we don't understand the policies and what they're trying to achieve.
Wow.
He openly said it. So the other, just the other day, one of the other central bank governors said, we will support the market. See news here I showed you.
Do you think Powell has had
this news here, Fed Collins, Federal Reserve?
Do you think Powell had a meeting with Trump about what's going on?
No, he doesn't meet with Trump.
No?
He doesn't meet with Trump.
Really?
No.
Not even a phone call?
No, he meets with... No, he reports to the Congress. So he doesn't actually report to Trump. So it's Congress. So I'm not really sure who exactly. I guess the head speaker, I guess. I don't know. But
if I was Powell,
look at
I
this.
would call
Collins.
Trump.
Federal Reserve, absolutely ready to help stabilize the market if needed. Now, what is... Why would she say this? Why does she need to say this? Of course you're going to, because it's your freaking job.
Yeah.
You don't need to say this, but why are they saying it? Why are they saying it?
To make people think everything's okay.
To chill. Yeah, just chill. Just chill. Everything will be fine.
Yeah.
Of course, we're going to jump in if we need to, right? Just reminding the people who they are.
Yeah.
Just reminding the people that they don't beat to the drum of Trump. They beat to the drum of central banks' monetary policy. Now, is the monetary policy change? No. If it comes out and the Congress don't like the monetary policy, well, that could be changed. And that could be the direction they go in. That could be. Could Trump fire Powell? He could. Well, through the Congress, they could. But that would be a huge mistake. Don't you think that would be a huge mistake to fire the head of the central bank right now?
Yeah, it will be.
Right?
Yeah, crazy.
Doesn't matter what people think of him, it will be unsettling, right?
Yeah.
So is that going to happen? Well, is his contract up? I think next year. I don't know. Can't remember. Doesn't matter. Not important, right? The whole thing, the job of a central bank is what? Their monetary policy, their dual mandate is to what? Stable prices, gainful employment, right? Low interest rates. That's their job, right? And they have to put things in place to make that happen, right? They don't. Do they have stable pricing? Well, it's kind of gone haywire a little bit. So, but the currencies are kind of not been that bad, but there's pressure on the US dollar. But remember, 6 months ago, the US dollar was on a high. So it's coming down now. There's pressure. It has to have pressure. Can't keep going high for all the time. So this is a normal evolution of the market. So Powell is going, hey, chill out, guys. We're not really seeing anything. You can't. Powell will not. I know he's late to the party a little bit, typically, but he will not act on one thing. See these three things right here I talked about? He's not going to act on that alone. He's going to act on over a period of time. Right? And I've said this too. Don't react to this one time. Don't go crazy. Right? Yes, we expect a pullback. Yes, we expect a correction. Yes, we expect all these things. It doesn't mean to say we're not going back up. I've said this. Is the S&P going back up? Yes, I believe it is. Is it going back? I do not believe. That's just my opinion. I do not believe that the S&P is going to go to its all-time high anytime soon. Why? Because every time it had a brand new high, it has tanked 20%. Every single time. Do your own due diligence. When tariffs came out before, the S&P tanked over 35% or 54%, something like that. Don't believe me? Do your due diligence. Check it out. So these things happen on a regular basis. So let's look at the S&P. So the S&P on a week-to-week basis. Let me see if I can get a year. No, not get it. Don't get the data anymore. So month to month. Okay. So even on this, like this here, look at this, right? I know this is the 21st, right? But look at this up here. Look at this coming down here. Do you think people were panicking here, right? 2022, right? COVID area, right? Look at this. Look what happened, right? The market is made for this. Is there a pullback here? Yeah, look, there's 3 months of pullback here. Think people were worried? No, came up and it started going up. But look at this big move.
Mm-hmm.
It's bound to have some kind of correction. And, being me with my price action scenario, I marked off this area. I said, this area here, 50% there, it's going to come here. I didn't say it was going to happen in 2 months, right? So, where are we going now? Yeah, we're going back up. But I still believe, and this is my belief and basically what I'm seeing, right? Because I trade swings. And I believe this is a swing being created here. And I believe that this is going to create a swing and go down possibly further. Where's this swing going to go? Could it go up to here? Could it go up to here? I don't know. How long is it going to take? I don't know. But in my, like, you look at these highs. Look, high came down 3 months. Brand new high came down 4 months. Brand new high, 2 months. Brand new high, 1, 2, 3, 4, 5 months. Brand new high. I guess this one could be high. 2 months, brand new high. 1, 2, 3, 4, 5, 6, 7. Right, weeks, not months.
Weeks, yeah.
Sorry. Yeah, sorry. So, again, what do we expect? Well, right now, I'm not going to be a risk-on guy. I'm not going to bet on this. I just cannot see, with this environment that we have right now, that this market is going to come up and make a new high above 6154. I do not see it. What I do see, what I can see, what I'm expecting to see is that this market goes up a little bit and comes back down even to test these lows down here. Why do I say that? Why? Because this is a great place to start buying.
Mm-hmm.
This, not so much, because we don't really know. This could be another bunch of months, 8 months, end of the year, beginning of next year. This could be down here. Awesome place to buy. Where do you think all the big boys are looking to buy here? I'd probably believe that they're probably looking at probably this area right here, this high right here, saying, yeah, when the market gets there, you're going to start seeing people put in positions. So this will move up a little bit, come back down, move up a little bit, come back down, and test this low, maybe test these lows. I don't know. But the point is my belief and the why of this environment we have, the tariff scenario, the unsettlement, the uncertainty. We don't know what the policy is. We don't know what it is. We can't trust the guy. I don't want to be risk on in equities. Does that make sense?
Yeah, makes sense.
Right. So where do we go from here?
Where do we go? I don't know. I'm gonna wait. I think the S&P 500 has very high chances of going to those levels that you mentioned.
Yeah. So if we look at the US dollar, right? The US dollar has pressure supposedly, right? However, look at this area here. Look where we are, right?
Mm-hmm.
We're not too far from that level, right?
Mm-hmm.
So, is this going to be here and go back up again? Is it going to come to? I see a little, based on my 50% retracement, I'm seeing next week it could possibly have some strength here with the US dollar, right? Just a little bit to fulfill that 50%. If it goes above that 50%, it could go higher, but we'll see, right? Do we have a swing? I believe we do. Saying we don't. Why is it saying we don't? Yeah. Oh, that's why. Okay. Well, no, we don't. So that means this swing has not been created for a long time. So we are due for a pullback. And this aligns with rules that I have created in my trading plan. And you place these. All right, here we go. Oh, look at that. So this is like a good level now, right? This 50%, right? Come here and go up to here, may go a little further, and then possibly come back down and fulfill this D extension. However, will it fill this D extension? Because if it fulfills this D extension, we've broken this major support level, right? So what about if this keeps going up, goes all the way to here, right? Could come all the way back and fulfill this, but we don't know. All I'm saying is I believe that there is going to be a pullback. Maybe this is a swing that's not going to be completed because we're in a range here from a major swing. So, we could be, we got this here, but look, here was the swing before and it broke, but it came back, right? It's come back down into this little channel area. You could adjust to this here. So this is where it started, went up a little bit, came back down, went back there, came back down, went above, and then came back down, tested, and came back down again. So this is the range that has been built, but this range has been built from this swing here. Right, look at that, right? So we got this up to B to down. There is the target right here from this swing. So this is just sideways movement, right? Sideways movement. So this could come all the way to bottom here and then go back up again. So we have to wait. We have to wait to see that happens, right? Make sense?
Makes sense, yeah. It's it's interesting how different looks the currency from the stocks.
Yeah, it is. It's very. I think currencies have a little bit more structure, right, than stocks, and I think because the reason is stocks have a lot of, people have. It's not so much psychology, but more of this stock, a bit like how you are. Oh yeah, it's going to be good. I've heard this and I've heard this, and the company's going to do this. The company's going to do this, and it's all good to listen to.
The investor sentiment, right?
Yeah. And it's just like a lot of it is, oh, I heard this. Oh, they're going to do this. They're going to spend it. Now I'm a company, and I'm going to say this.
Speculation.
I want people to buy into my company. So I can say, yeah, Isaac, we're going to do this, and we've signed this contract, and we're going to develop this product, and we know that there's a demand for this product in the billions, and this and that, and we're very close, this and this, and you get excited, and you go, yeah, I'm going to invest, and you invest. And then other people invest, and other people invest. And then all of a sudden the stock's going up, and you're getting excited. Oh, woo, 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 woo. And then all of a sudden it hits the ceiling area, and then it starts coming down. And you go, what the hell's going on? It comes down, and it comes down, and it comes down, and it comes down. And then I decide to be real with you and open up the books and say, okay, well, you invested in my company, right? So I sold some of my stocks that I have so I could get paid. You don't mind, do you, that I did that? Do you, Isaac? Are you okay with that? But I used your money, remember, because your money increased the stock value. So I sold my stocks and I made about $3 million for me and my family. And you say to me, well, what about your research? Oh, yeah, we decided to shut that bit down. We're not doing that anymore because they can buy that product cheaper from China. And oh, well, we had constraints in trying to get that licensing. Now, all of a sudden, all that stuff that I told you we were going to do, we're no longer doing. So the company is, look, again, I'm a conspiracy theorist, I'm cynical, right? But I've seen this play out over and over and over again. This is one of the fundamental reasons I do not buy stocks. And I know people make a ton of money on stocks. I get it. They do. But I can't stomach that risk. There you go. I said it. I can't stomach it because the reason is because I'm cynical and because I'm a conspiracy theorist. When I see a stock is going up and it starts coming down and people are scratching their heads, I do this. The bastards. They manipulated us. They did this on, right? I automatically think and I automatically feel that I've been shafted. Now, whether it's right or wrong, I don't know, because it's happened to me so many times. So I refuse to let it happen to me again. Does that make sense?
Yeah, makes sense.
Right?
Fair enough.
So, and it's getting, the more I've been looking at it with you and everything like this, I've seen some great opportunities out there for some great short-term trades, not necessarily long-term. So, I'm getting better and, but I still like my currencies. So anyway, we're at 10:41, gone over again.
All right.
Me and my yakking. So hopefully, we had some good insights there, and we kind of looked at some things. But guys, this certainly is what it is. This is why we called it a journey. We call it, it's a process of understanding. And when you put these, things into place, it just makes things easier, and it may feel very daunting at the beginning. It may feel very kind of like, oh my God, I don't know how to do this. I don't know what to do here, right? And yeah, I can remember, 16 years ago, I was in the same spot. And it wasn't until I had a mind shift, perspective shifted in my mind and made me sort of understand what is it I actually need to do, right? Not try and pull out things out of my hat and everything like that. Really understand what the market does and create something that when I look at the charts made sense. Something that created in my mind that when I look at it, I can see how this could work. And never mind all the other stuff that you've consumed to get to that point. So when you have a belief that the Great British Pound is going up, right, and you put all your structure in and you put everything, you say, yeah, when the market comes back to here and stays there and holds and then goes up and takes out that previous high, yeah, I'm going to buy. Because you have a bias to us. You've created the structure for you. Does that make sense? So this is what you need to create, guys. This is what you need to create. So enjoy your journey, embrace the process. And hey, thanks for joining us. Thanks for listening. And if you have any questions, please email us. More than welcome to share things with you. So on that note, have a great yesterday. Go Leafs go. And we will see you next week.
All right.
Take care.
Thank you, Ashley. See you next week.
See you, Isaac.